Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency again. Last week we saw that euro currency stands under pressure because the price action was really directional, and we see even some acceleration on intraday charts and on daily chart, as we have just talked about it on Thursday. On Wednesday, when we discussed the possibility of the possible upward reversal, some retracement. And actually, currently, we do not see any signs of that situation has changed. So mostly everything stands the same. As we talked about it through the week, this market shows no respect to significant intraday support areas. It shows the downward acceleration. These two signs are not natural for any bullish market. So it just tells us that market is not bullish. And that was the reason why we come to conclusion that downward action should continue. And indeed, as you can see, on Friday, market has shown very small reaction on the COP target and dropped lower. On Friday, we have tail close, although we do not have really significant range of the trading. But so take a look at that week and Friday session has closed right at the lows. It means that currently we do not see any context and reason for taking any long position in euro currency. We do not see any reversal patterns or signs of the possible reversal, neither on the daily chart nor on the intraday charts. On the daily, two moments we need to take into consideration. So first of all, market actually has no significant support areas because all major fib levels have been broken with the largest swings. Here it was the swing to the upside, and here a swing to the downside. By these swings, the levels that could be used for this current action has been broken. Because market right now shows the inside swing. So this one incides to this one, and that one stands inside to the previous swing up. All levels inside of the swings also has been broken. So it means that we do not have any significant support and resistance areas that maybe could become the levels where we could start search for some reversal patterns or something of that sort. Two moments. Second, there are just two levels that we could keep an eye on the next week. First one is 113. This will be monthly pivot support one, and it's also accompanied by the trend line. So you can see I even adjust the trend line. So previously it was based on these previous lows, but since they were broken down, I apply a bit softer conditions and move this trend line lower just to provide at least theoretical support area to the euro. So that's the first level that we will be watching for on Monday. The daily target, potential bearish target, stands at the OP. It's also accompanied by the daily average results, approximately 112.40. So we could speak right now probably about the 112 area. These lows, so 112, 112.40, this will be next destination point. There's two levels to watch for. So what we could get on the 113, if you'll take a look at the follow time frame chart, the patterns that we have discussed last week, but we haven't got them. If you remember, we talked about the possible Brent bar or double repo or something like that sort, because we have actually very good thrust down here. But none of them had been formed last week. But these patterns we could keep an eye on next week. So this is 113, and market stands just 17 pips above it. As soon as it will be hit, well, maybe something will be formed. We have the first close above the 3x3 here. Maybe we'll get second one after market will hit the target, hit the support area. But actually, guys, these patterns are not really important for us because we have no intention to trade euro currency on the long side currently. Mostly, we expect that if some bounce will happen, that will be just a tool, the chance to get short position at the better level. And here we will be watching for confluence resistance around 1382, maybe the first fib resistance, depending on what patterns will be formed. Potentially, this could be also, maybe this will be formed hand shoulders that could show the ABC retracement. We will see it, but the utility of this possible pullback is just the chance to get the short position at the better price. So we don't have currently the intention to trade it on the long side, just because we see this kind of the price action in euro currency. So that's 2 months that we will keep an eye on euro currency on the next week, and let's see how it will turn, what will happen around 113, and what patterns will be formed here.